Worried about what your financial situation will look like in a year, or even in a few months from now? With all the concerns about economic growth, it's reasonable to be worried about a potential recession. But the key is to start preparing now so that you're in the best position with your money if a recession does hit in the next 6 to 12 months. A recession is a period of economic downturn, characterized by high unemployment, slow economic growth, and declining business activity. Before moving forward, make sure to like, subscribe, and share. Hit the bell icon for future updates. Also, visit this channel for more lifeguarding information. Recessions are typically caused by a variety of factors, including financial crises, oil price shocks, and policy mistakes. They can have significant negative impacts on individuals and societies, including increased poverty and social unrest. Governments and central banks often respond to recessions by implementing economic stimulus measures, such as lowering interest rates or increasing government spending, to boost economic activity. Economic recessions can be caused by many different elements, including loss of consumer confidence, high interest rates, a stock market crash, and asset bubbles bursting. Most events that will cause the economy to slow down can also lead to a recession if left unchecked. The 2008 recession occurred between 2007 and 2009. It was triggered by the collapse of the U.S. housing market, which had been fueled by risky subprime mortgages. This led to the failure of several major financial institutions, including Lehman Brothers, and the U.S. government was forced to intervene with bailouts and stimulus packages to prevent the crisis from spreading. The recession had a significant impact on the global economy, leading to high unemployment rates and a sharp decrease in international trade. It is considered one of the worst economic crises in modern history. High interest rates or a lack of funds available to borrow can lead to a recession. The 2008 recession was caused by a housing bubble and irresponsible lending practices. You may hear that a recession occurs when the GDP growth rate is negative for 2 consecutive quarters or more, but a recession can quietly begin before quarterly gross domestic product reports are out. That's why the National Bureau of Economic Research, NBER, measures 4 factors using monthly data to determine whether a recession happened. When these economic indicators decline, so will GDP. Buffett was especially skilled during the credit debacle. His buys included the purchase of $5 billion in perpetual preferred shares in Goldman Sachs (GS) that paid him a 10% interest rate. Buffett did the same with General Electric (GE), buying $3 billion in perpetual preferred stock with a 10% interest rate. Stocks. Nikolaos Panagurtsoglou, a strategist at JP Morgan, is the latest to chime in, noting that the stock market's pattern of late is very reminiscent of what was seen in the days leading up to the 1969 recession. Fortunately for consumers, that one proved to be fairly mild. The stock market is one of the keys to the comparison. In '69, the S&P 500 saw a total decline of 34%, bouncing back to a 20% drop from its peak when the recession finally started. The current index is down a little more than 20% from its 52-week high. Real estate. Some analysts are putting the probability of a global recession as high as 98.1%. There have only ever been a handful of occasions over the past 60 years where prices meaningfully fell more than 10%, but currently the consensus on Wall Street is that national housing prices will drop by 7%, with a worst-case decline of 10% to 15% if interest rates continue to rise. Of course, every market will be different, and according to Moody's Analytics, the most vulnerable markets could see declines of up to 25% from the peak. Currently, the decline will continue for another 12 to 18 months before bottoming out in Arizona, Idaho, and Southern California. For those with fixed-rate mortgages who plan to remain in their homes for another 5 to 10 years, the change is probably not going to make much of a difference. But for those wishing to invest in or purchase a home, some deals may start to appear on the market. Hold cash. Cash is king during a recession. Take a close look at your spending habits and create a plan to increase how much you save. Building up your emergency fund will prepare you to tackle future expenses that aren't already a part of your monthly budget, including unplanned costs due to a shortage of cash, a layoff, or other unexpected events like an increase in food or gas prices. Build a 12 to 24-month emergency fund. In a stable economy, experts recommend saving for 3 to 6 months' worth of living expenses. Look at market fluctuations as your friend rather than your enemy. Profit from folly rather than participate in it. Warren Buffett says, An emergency fund of 6 months will help you face potential financial hardships. Keep your credit accounts active. Now is not the time to panic and cancel your credit cards. The age of your accounts is a factor in your credit score. Even if you transfer balances, keep your credit cards open. According to Equifax, credit scores from 580 to 669 are considered fair. 670 to 739 are considered good. 740 to 799 are considered very good, and 800 and up are considered excellent. Find opportunities. According to Yahoo Finance, historically the S&P 500 has fallen an average of 29 around a recession, with a median decline of 24, yet after every bear market comes a bull market. This means that investing during a market decline is much more profitable than exiting the market and waiting over the long term. The market always recovers in every single example so far in history. Once stocks have found their low, their average return the following year is 40%, and within 2 years the market has increased an average of 58%. Finding a second source of income outside of your day job will keep you extra prepared. Whether you decide to pick up a part-time job, start a side hustle, or sell used items through second-hand vendors, creating additional revenue will give you something to fall back on in case of a reduction in or loss of your primary income. During a recession, the prices of some assets, such as real estate or companies, may decrease significantly. Buying these assets at a discounted price and holding on to them until the market recovers can potentially yield a profit. Look for opportunities in the debt market. During a recession, the prices of bonds tend to increase as investors flock to safer investments. Buying bonds at a low price and holding on to them until they mature can potentially yield a profit. Consider starting a business. A recession can be a good time to start a business, as there may be less competition and lower costs for things like labor and rent. Mortgage debt. If you have low-interest mortgage debt, stay put. Many people believe that paying off debt during a recession is a smart idea, but I don't advise that. It may be better to make minimum payments and keep the cash accessible. It's important to note that these are just a few potential strategies and that investing always carries some level of risk. It's important to do your research and consult with a financial professional before making any investment decisions. And last but not the least, be quick. You have to be quick in your actions. Just follow any strategy, but before anyone knows. Here are a few side gigs and investment strategies that may be worth considering during a recession. Delivery services. With more people staying home during a recession, the demand for delivery services, such as food, groceries, and packages, may increase. Remote work. With companies cutting costs, remote work may become more popular. Online tutoring or teaching. Teaching or creating online courses in your area of expertise can be a great side gig. Home repairs or maintenance. Consider offering a home repair or maintenance service during a recession. Online trading. Online trading platforms allow people to buy and sell stocks online. It can be a good investment strategy, although it carries its own risk. Real estate crowdfunding. Invest in real estate projects with smaller amounts of money and earn a share of the rental income from the sale of the property. I hope this video will help with the recession money-making plan. Thanks for watching.